Very good evening to all our viewers. I'm Chaiti Narula. You're watching WION Wallet on World is One News. Let's take a quick look at the headlines from all across the business world around the world that we're tracking at this hour. The finance minister denies talks of increasing long-term capital gains in stock markets. FM's comments come a day after PM Modi had suggested people earning from stock markets should contribute in nation's growth. E-commerce market leader Amazon's losses in India more than doubled to around $500 million during 12 months that ended March 2016. The broader markets outperformed the frontline indices. The Sensex closes shop in today's trading session down almost 1%, while the Nifty too shed approximately 1% in today's trading session. An enforcement directorate, which is the ED, questions AirAsia's India's chief financial officer in connection with an alleged forex violation case. On to the big story now, which is making headlines at this hour on WION Wallet. Prime Minister Narendra Modi will take stock of the economy with experts at Niti Aayog tomorrow against the backdrop of currency crunch post the demonetization move of the government of India. And he will discuss ways to speed up growth as well. The theme for tomorrow's meeting is economic policy reform. The road ahead is something that they would be discussing. We're now joined by our chief political correspondent, Karthikeya Sharma, to give us a sense of what we could probably expect from the meeting today. Good evening, Karthikeya. Just give us a sense of what are the broad points that are going to be discussed in tomorrow's meeting at the Niti Aayog.
Chaiti, there are a couple of issues which are going to be taken up. For example, the Niti Aayog meeting and the couple of people who met the Prime Minister was a spade work which is being done for tomorrow. Tomorrow, all the economists are going to have a meeting with the Finance Minister in morning. And once the discussion is done, they are going to meet the Prime Minister in evening. I think it's going to be a stock-taking meeting, the sort of suggestions they would like to give to the Prime Minister as to what he needs to do. And also this will have to do with the physical structure, the market, the physical impact, rural areas, and the sort of further tweakings which are required. But I think Prime Minister is going to take all these points or suggestions into account and amalgamate it in the way the budget is laid out in February next year.
All right. Karthikeya, tell us, will the PM also discuss the steps that he's going to take beyond December 30th after the demonetization move, of course? And what is your sense of what really could be the possible steps that he would end up taking? I mean, some sense of how the budget this year also probably might pan out to be.
I think going by the personality of the Prime Minister, I really don't think he's going to tell them as to what he wants to do. But I think it's going to be like a sapping up meeting where Prime Minister is going to hear each and every economist up close and personal. He's going to sap up their suggestions. He's going to understand as to what could have been done, what lacked, and what more needs to be done. Because see, he has already clearly justified his political commitment to it. What he needs is economic tweaking. So I think what he's also trying to do, Chaiti, in my understanding is, because politics is never dissociated with economics, by getting these economists, he's also trying to create a financial consensus. There is a political consensus he has created. He's also trying to formulate an economic consensus that this demonetization will serve the country right. Because politically what's happening is you have two groups, one set of economists arguing against another. He wants to create that consensus so that both political and economic become part of the same line, same discourse. That's my understanding, Chaiti.
Absolutely. Karthikeya, stay with us. We're going to come back to you and discuss the capital gains tax issue that really took place today, because if you saw in the markets, you had the Sensex and the Nifty both shedding a percentage each. And if you took a look at the sectoral indices in the market as well, it was a bit of a bloodbath. Excepting the FMCG index, everything really was down. And these are really jitters coming on the back of the Finance Minister Arun Jaitley's statement to the government that the government does not plan to impose a long-term capital gains tax on stock markets, and that's the clarification that FM had given. Now, the FM's comments have come in a day after the Prime Minister Narendra Modi had suggested that people earning from financial markets must make a fair contribution to the nation building. Prime Minister Modi's comments were interpreted as a pitch for higher taxes on income from capital markets in the upcoming budget. But Finance Minister Jaitley clarified the PM's stance on this and has said that the speech had been misinterpreted. Currently, when a stock is traded on an exchange and is held for more than a year, then the gains from it are exempt from tax. But in the case that profits are booked in less than a year, then a short-term capital gains tax of 15% is an imperative payout to the government. Now, while Dalal Street was confused on the back of these comments, the FM's clarification really comes in as a respite. Karthikeya, give us more insights into this. Of course, today, if you take a look at how the markets were behaving and the kind of volatility that the stock markets were showing today, it really looked like it is coming in on the back of the fear that there would be a capital gains tax on a stock which is held for over a period of 1 year as well, which is otherwise exempt from the capital gains tax. The FM has come and given a clarification, but I don't think that the Dalal Street has factored that clarification in as yet, with the way especially the markets have behaved today and the sectoral indices.
No, absolutely. The markets have contracted. It's literally a bloodbath out there. So that's the reason why the finance minister had to explain this. And secondly, the issue is, which is my feeling, that the prime minister was trying to create a new political language in terms of just taxation, saying that everyone needs to give equal taxes or equal amount of taxes. But I think somehow it got misinterpreted in the market that he's talking about the Dalal Street. And I think that's where the clarification came. But my understanding is that if the political, the will is affected by the Prime Minister, then he should be taxing the urban middle class less and more the rural captive market where rich farmers don't end up paying taxes. It is the middle class which is being squeezed from both the ends, and not those rich cooperative farmers who end up controlling huge banks in Maharashtra, Andhra Pradesh and many parts of Madhya Pradesh. And I think that's where the focus should be. And I would that way I would say that's where the equity lies.
Thank you so much, Karthikeya. Very important that our viewers get this clarification right, as investors, traders and speculators in the stock market as we speak are feeling the jitters of a potential capital gains tax on a period of higher than 1 year hold period on your stocks, which might just be announced on the budget day. But the finance minister has clarified, and that's the message that the finance minister has given out, that there would not be this particular capital gains tax that we're talking about. Moving on now. The Enforcement Directorate has questioned AirAsia India's chief financial officer in connection with an alleged forex violation case. The ED is probing ousted Tata Group chairman Cyrus Mistry's allegation that fraudulent transaction of 22 crore rupees involving non-existent entities in India and also in Singapore were carried out in an instance involving the airline. We're now joined by our chief business correspondent Sumit Chaturvedi for more on this. Sumit, what is the latest on this particular probe? I mean, I know that the chief financial officer of AirAsia India has been pulled up and the Enforcement Directorate is probing AirAsia as we speak. But where really do you see this probe panning out, and what is the sense that you're getting from sources as far as the Tatas are concerned on this particular issue? Because this only came out once Cyrus Mistry had written that letter which got leaked out, talking about how a 22 crore rupee fraud was committed in AirAsia while he was really the chairman of Tata Sons.
Well, as far as Tata Sons is concerned, they have still from the beginning defended AirAsia India. They have said that AirAsia India itself has filed a case in Bangalore against some executives. They have not named the executives, but they have said that the case has been filed in Bangalore against the unnamed officials of AirAsia India, which were involved in some kind of fraud. Well, Deloitte had prepared a report on AirAsia India's fraud, and there were some problems in AirAsia India's accounts, and some orders were given to some entities in Singapore and non-existing entities in India. So this will be serious trouble for AirAsia India going forward. Well, CFO was probed by ED last week. We expect ED to call other officials of AirAsia India in the coming few days as well.
All right, Sumit, thank you so much for that update on AirAsia. Now, we're going to get into a short break on WION Wallet. More news and updates follow on the other side with a complete wrap-up of the global markets, especially China, Japan and India on the other side. Stay with us. Thank you so much for staying with us right here on WION Wallet, and welcome back. And on to a top story that we're tracking at this point of time. A law against Benami or proxy ownership of property is in the works. The Prime Minister flagged off his concern about such ownership in his weekly address to the nation, warning that this is the next step in the fight against black money and corruption. So after demonetization, really, the government has gone on to the Benami transaction. So how does this Benami business really operate? Let's understand as we have Jessica Taneja go out there, talk to lawyers and to real estate professionals as well, and put this into perspective for us.
Benami property, as the name suggests, refers to property transactions wherein the person in whose name the deal has been done is actually a mask for somebody else. Generally, that somebody has a lot of black money to conceal from the authorities. In 1973, the Law Commission of India recommended a law to crack down on such properties. However, it was in 1998 that the Benami Transaction Prohibitions Act came into force. The law prohibited all Benami transactions and even authorized the government to recover such fraudulently held properties. Yet the act suffered from serious deficiencies and was not well implemented. To address these, the Modi government brought in fresh amendments this year, which were passed by the Parliament of India as the Benami Transactions Amendment Act 2016. Under the new act, a transaction is named Benami if property is held by one person but has been provided for or paid for by another person. The act prohibits the person who is the hidden but real owner to recover the property. Also, Benami properties are liable for confiscation by the government. All Benamdars, that is the person under whose name the real owner does the transaction, could also now face imprisonment from 1 to 7 years or could face steep fines which may extend to 25% of the fair market value of Benami property. The new law also provides for authorities to probe any Benami transactions. Now these are initiating officers, approving authorities, administrators and adjudicating authorities. Benami property transactions in India saw a boom as scams mushroomed. Properties in Delhi, NCR are known as safe havens for black money hoarders and are hotbeds of Benami property. The government is hopeful that the new Benami Act along with the Black Money Act will help fight back money both within and outside the country. Jessica Taneja for WION.
We've got with us Jessica Taneja standing by in the newsroom to put this further into perspective, as she already did with what you just saw as an explainer to what this Benami Transaction Act really is. Just to give a sense to our viewers, the earlier government had not operationalized the Benami property law. It was enacted in the year 1988 and it did lay dormant, really, gathering dust for such a long time. Now, the first step, Jessica, to erode corruption out of the system was the demonetization move by the government of India. Now, this seems to be the only sane rejoinder going forward. What more do you think the government would have to do next as the steps going forward to completely eradicate black money out of the system?
Well, as we have seen, this comes right after Prime Minister Narendra Modi, in the last month had announced demonetization. This is just a step ahead because a lot of people have been parking their black money in the real estate sector, but from what I've understood, I've gathered, is the fact that we need to implement this law strictly, and the empowering authority needs to ensure that this is people abide by this, and the government needs to ensure that this law is implemented.
Right. Jessica, what is the reaction really of the market experts, including lawyers, real estate developers that you spoke to through the day?
Well, they say that this would obviously ensure, stricter norms for the reality, real estate sector. But as a matter of fact, they say that they would see a dip, in the market when it comes to this move. But they also say that, with these policies and these norms coming into force now, it will take some time, that things would actually turn around in the real estate sector. In terms of what the lawyers have been saying, they say that this is a very welcome move because people who have been, putting aside their money in, Benami properties will now face, charges. So this will definitely amount to some declared income tax, which has been missing for a while from the country now.
All right, we'll have to track how the rollout of this particular law really takes place, and we will keep our ear to the ground as far as that story is concerned. Thank you, Jessica Taneja, for joining us live from the newsroom on the update on this particular story. Moving on now, Holiday trading volumes in Asia have turned slim. China and Japan shares have fallen this morning. The Japanese shares fell in trade as the yen showed strength against the dollar. Chinese equities extended losses as well. The Topix index in Japan posted losses in Tokyo and extended its decline for the year. The trading volumes were 40% below the 30-day average mark. The Nikkei climbed back from the bearish momentum that we saw earlier, and the index managed to erase the 2016 losses as well. The Shanghai Composite Index dropped for the second consecutive session and touched its lowest since October this year. The yen, of course, is showing strength against the US dollar for the fourth consecutive trading session, and the South Korean won showed strength for the first time in the past 9 trading sessions as well. Emerging markets, of course, across the board are showing fair bit of volatility post the US presidential elections thanks to Donald Trump's expected protectionistic policy on the US. Now, Australia, UK and the US markets will remain shut today. Let's really take a look at what happened to the markets in India as well. The Sensex closed shop in today's trading session down almost 1%, and the Nifty too shed approximately 1% in trade today. The Nifty ended below the 8,000 mark at a 7-month low, and gold was down in trade today, ended down 0.08%, and crude oil was up almost 0.5% in trade in India as well. As far as currency is concerned, the rupee closed at 67.78 to the US dollar and 83.21 to the pound as well. The broader markets, interesting to note, underperformed the benchmark indices as BSE mid cap and small cap both shed close to 2% each. The markets overall saw a fair bit of selling pressure set in India. In fact, if you saw all the sectoral indices, they were trading in the red today and closed in the red as well, excepting the FMCG index that continued to hold fort, being a defensive sector really. We've now got our markets analyst who's joining us live to talk to us about how the markets really panned out. Kiran Jadhav joins us on WION Wallet. Good evening, Kiran, and thank you so much for joining us on WION Wallet. Now, what would you really attribute thin volumes traded in China and Japan to? Let's start off with Asia and then we'll come on to India.
See, the holiday season is basically something that has made sure that people are not active in the markets. At the same time, the falling indices basically have prompted people to stay away because the dollar index is rising, the dollar is strengthening, and this is weakening the emerging markets. So if you look at emerging markets across the globe, everyone is moving south, and we feel that there is still some more pain ahead. With this pain moving ahead, people are keeping themselves away because then fresh money will come in when we are near the supports. So in general, there is a holiday kind of mood in the markets, and people are waiting for the markets to correct even further.
Now, you know, while we understand that bouts of volatility in the markets, and any market for that matter, not really India, they're a regular feature. They do garner conditioned responses to the volatility as well, as we have seen in the Indian markets really. Now, do you think this kind of conditioned response really works now after so much pressure that the market has seen? Of course, you saw Brexit, you saw the US presidential elections, and you also saw demonetization in India. I mean, we saw significant capital outflows in 2016 as well. We saw currency weakness coming in, investors piling on to the export-driven healthcare and tech sectors as well. Now, how do you see the pattern evolve in 2017, and do these conditioned responses that the market is used to for so many years really work anymore in India?
See, if we put India into perspective, if you look at the long-term charts technically, then we are still in an uptrend. Okay, right from 2008 onwards, we are still clocking higher tops and higher bottoms with good kind of time corrections. Now, we registered an all-time high on the Nifty and the Sensex in somewhere around January, February 2015, after which we saw a huge crack. And this crack that we saw took the markets to took the Nifty way down below 7,000, which was the rising trendline value right from the year 2008, which is a good sign. After testing this support, the market has rallied once again, and it basically took a resistance once again at the all-time high of 2015. After which we are seeing a correction once again. Now, this correction is also called as an intermediary trend, and it is not a start of a downfall. I am pretty sure that the next year will start with a big bang as the market comes near the support. now, the long-term support trend line, which I'm talking of right from 2008 onwards, is around the 7,500, and it will change because of the angle of the inclination. The more the delay, the support will be even higher. The faster the crack, it will be lower. So at the current juncture, around 7,500 is the worst case scenario support that I feel the market will have. I don't see the markets coming down below 7,500 in any circumstance. And from here, we'll see a next bout of buying. And this will surely lead to a next high of over 9,000, which is the original resistance. Now, this technical structure, if you put in perspective, is a very strong structure, and all small corrections are basically very good for the markets, because the weaker hands move out of the markets and the stronger hands take charge of the markets. So in all, I feel that the correction is good, which is healthy, and I feel that the new top is going to be taken off in the year 2017. And the reasons is, I feel demonetization, Trump, all these negatives have been built into the markets. People will start looking at the budget, say from 5th or 8th of January, once the FIs return. And once all this happens, I feel that the next bout of rally is bound to happen. With all those negatives that have been given by the government till now, I feel Dr. Modi will give a piece of cake for us, a sweet for us, so that, in this budget, so that people will become happy. This is
Sure.
also the government's third budget, which is very important for the government to take big bang announcements. If they don't do it this time, then time will be very less. So
Right.
taking all this into perspective, I feel that we are very near to the bottom. We need to start bottom fishing for the next rally for the year 2017.
All right, thank you so much for that perspective on the technical aspect, of course, for the markets. And unfortunately, that's all the time that we have on WION Wallet. And interesting to note how Mr. Kiran Jadhav just mentioned that this is the time when one goes bottom fishing, because it looks like we're headed for a steady future as far as technicals are concerned in the markets. We will track the fundamentals down in detail as well. For that, tune into WION Wallet tomorrow morning at 9:30 a.m. For now, this is Chaiti Narula signing off.